Great. Then I'm just gonna share my slides and then we take it from where. Great. Hello, everyone. We're excited to have you for our latest edition of Nikhil's Investor Lounge. I would just ask everybody for you who joins in, just make sure to mute yourself and we'll have time also questions later on. So we're excited to have you today for Nikhil's Investor Lounge. Nikhil will talk all about it, introduce our guest. But before we do come to that, I briefly would just want to introduce DoDash, who we are, and just so you understand what this was all about. So DoDash started with one thing in mind, which is the biggest challenge for most startups, which is the access to capital investors. Less than 1% of startups ever raise any funding. And we really make sure that startups are able to become investable and raise the funding they need. For that purpose, we are launching in actually 2 weeks our investor relations platform, a platform where we'll help to guide you, understand the fundraising process, prepare your data and documents, find and discover the right investors, but also as investors find the right startups, go through the process, share your documents, share your updates, and go through the whole fundraising journey. We're going to launch in 2 weeks. If you're interested in becoming part of that, just sign up under dodash.com. I will add the link also shortly. In addition, we have also other tools in our toolkit. Might it be educational content, and we have also different products to help you. If you're interested, I'm happy to share more. In addition, we are supported by a lot of partners. Might it be In5, might it be Craig, HealthPrice, Impact. So we can see there's a lot of different organizations that we have already worked with. And the ones here at the bottom also offer certain discount prices for your startup. So you can also use these ones. We have a featured deal for tonight, which is Data Vault. So you can get 50% discount on annual packages by Data Vault. I will share the link briefly into the chat, and you can have a look at that. With that, if you have more questions on DoDash or what we're doing, just reach out to me under my email or on the dodash.com. And with that, I would give it to Nikhil to introduce our speaker and take it from here. Let me just put you into the spotlight, and then Nikhil, you can take it from here.
Thank you, Michael. And thank you, Ratan, for joining us for this edition of my Investor Lounge. Instead of me introducing you, I would rather have you introduce yourself.
Sure. Yeah, happy to do it. Thanks for having me, and so great to see so many people here. And I know that you're coming from all over the world, and that's super exciting. So a little bit about myself. So, I've been an investor, you can say, my whole professional career. Started off in private equity, then focused on venture capital, and have invested in all asset classes of venture capital, from seed all the way up to, say, take privates, which is when you have a public company and you then ended up taking it private. So I have a multitude of experience, and probably have done over 75 plus investments, and some of them have ended up being unicorns in some public companies. So excited to share any insights that I can. But the other point I would like to kind of talk about outside of my investing career, I have had some operating experience as well, being a GM of a business and also being head of corporate development and strategy in a fast-growing fintech startup. And so I can bring some of those insights as well.
Awesome. Awesome. Thank you. Tell us something about Fort Ross Ventures. What's your investment thesis?
Yeah. So Fort Ross Ventures is a very new fund. We're currently investing out of our second fund, which is $240 million. Our first fund was $100 million. And the initial strategy of these two funds was to invest in what we call mid-stage or growth stage companies. And these are companies that have over 7 million in ARR on their path to doubling, tripling, and getting to the elusive 100 million, hopefully. So you can think about companies in that range. Also, if another nomenclature used in the market is Series B or C or D, these are the areas that we also focus on. And that's broadly the mid-stage fund strategy. We have newly launched a seed stage fund and a late stage fund. And the seed stage fund focuses on pre-revenue and kind of early Series A companies. where you found product market fit. And then the late stage fund is focused on companies that are kind of Series E, F, that are 36, 48 months away from an IPO or some sort of exit.
Awesome. I mean, this is serious stuff. Let me ask you something. What's the funniest thing about you?
The funniest thing about me, you know, I am, you know, I invest in a lot of technology startups, but I am a pretty sports geek. I try to play basketball a lot, and even though I'm not good at it, I still try to go every weekend and try to compete with you know, the people at the local gym. I think it's about competition for me, even than being good at something. So I'd say the funny thing is that even something I'm not good at, I keep trying to do.
Do you still have interest in cricket? I'm sure there are a lot of colleagues from a lot of people, a lot of founders from India joining us here.
You know, I was asked to join a cricket league out here in the Bay Area. I probably should have done it. I haven't done that yet. I should, though.
Yeah. Do you follow IPL by any chance?
I do not.
Okay. So we talked about something very interesting. You mentioned, you said that, you know, we recently launched a fund, which is a seed stage, which potentially allows for pre-revenue companies to go through a diligence process with you. How exactly do we reach you? Other than, of course, they can reach you through the DoDash investability platform. How to reach you? What will get your attention?
So when we're looking for seed stage companies, you know, there's kind of 2 or 3 things that we're really looking for. One thing is, if you're an exceptional team and have the appropriate expertise in the area, that the problem that you're tackling, that's going to catch our attention. And that doesn't mean you have to be a former Microsoft or Amazon or, you know, one of these big large tech companies. It's actually showing your domain expertise in the area. And you can do that not only with these names, but actually, you know, with a presentation showing that you understand it, or building a product that shows that as well. So we're a firm that's more on the show me versus what's on a piece of paper. And so show us your MVP, show us your presentation, show us your thoughts. And they shouldn't be very general. They should be very deep to give us a sense that you actually understand what you're doing. And then the second thing I would say is have an MVP and not just have, you know, a deck. If you're looking for capital, we're looking for products that are ready to go to market versus products that need to be incubated. And we understand that in some components, you know, you're a pre-revenue company, you may need to give away your product in the initially to see it, but we want to see some data and test information. So like I said, we're show me firm, and the best way to just, if you have something, just send it across on our website.
Awesome. So just a couple of follow-on questions around it. When you talked about launching a seed stage fund, or that the fund that you've launched, is it sector agnostic, or what sectors are you focused on?
It's sector agnostic, and candidly, it has a very unique strategy. So it may not apply to all parties here, but the fund is focused on investing in Eastern European founders or people from the Eastern European region. And the reason we're focusing on this, and you can be located anywhere, you don't have to be in Eastern Europe, you have to be from one of these Eastern European countries, is they're the most underinvested, well, one of the most underinvested class when people look at startups. And that's because of maybe the region they're from or the lack of capital in that market. And so we're looking at Eastern European founders who are building amazing companies in those regions or outside, and we can help them, you know, scale these companies up through our help and our advisory platform, or we can help make introductions to other VCs in the US market where I'm based.
Okay. So this is kind of hard stuff, right? I mean, you know, the whole, right from getting your attention to making the pitch to, you know, wooing you and somehow getting that term sheet from you. But I think pitch is where it all starts, isn't it?
Right. Yeah.
What's the funniest pitch you've ever heard?
You know, there's not that many. Once you get to the mid stage or Series B types of companies, that the pitches are pretty refined and good stories. However, on the seed side, that's where you see, I think, the most interesting pitches. There was a company, I think, early on in the EV area about, sharing, sharing charging plugs from your home to other places that people don't have access to plugs. Those types of ideas. There was another company that was just, creating specialized, I think, chat for buying gifts for your parents, where you could do that in a Facebook group. You don't need to create a platform for. But I think some of these very niche companies that came to us early on seemed like a good idea, but it was like, it was so niche and it was so out there that, wasn't, I don't think, investable.
So are you trying to say the size of the market was not sufficient enough, or was it too much of a heavy lifting which was necessary to bring it to fruition?
Well, you can say it was a market size challenge, or you can say, how do you actually effectively acquire these customers without spending thousands of dollars, because there's such niche ideas. And so when you have a niche idea, your CAC is going to be high. And so why will a venture capitalist want to invest in something like that without some virality in it? And none of these ideas had any virality in it because they were so niche.
Gotcha. So in terms of virality, I think this brings me to a very interesting point. Usually B2C products have much higher virality, but that's also a space which is really bloody, if I may. So how do you still make that cut out there? I mean, if every venture capitalist goes after a B2C virality aspect of it, where does it leave the B2B components, B2B startups?
So virality is, I think, often seen in consumer startups, but it's actually present in B2B as well. So you have to really look at the key metric within each sector. So when I look at DevOps, well, DevOps has a very lagging indicator for revenue in most of these companies. Some of them are open source, some of them are very niche-oriented products. But what I look for in DevOps is the size of the community and how many people are participating and engaging in discussion in some of these tools. And then the second component I look for is that community, and in terms of conversion into maybe active buyers of the product and whatnot. And like I said, that's a lagging indicator, but community is a big number. And virality is in that one person uses it, refers it to another, and refers it to another. And soon you have a company with 300,000 people. They may not be paying customers, but they're actually very excited and happy and engaging with the product. You can see that in B2B products with freemium models early on, where people will sign up for free, refer their friends, and soon you have a conversion into buying. Slack is a great example in the B2B space, where they were not selling to the top of the funnel, they were actually selling to the individual groups and departments. And what happened is when they sold to the VP of product, or they sold to the marketing team utilized it internally and then ultimately sold it up top. And so there is virality in B2B as well. And the core reason there's virality in B2B is the same reason there's virality in consumer startups. And the virality is focused on delivering value and making people very happy that they end up being your advocates.
So thank you so much for talking about the B2B side of things in terms of virality. You mentioned specifically DevOps and messaging collaboration platforms. In your opinion, what ideas, and I'm going to ask you specifically on B2B first, and then the same question for B2C. What ideas you've encountered recently which deserve more attention, especially from VC community?
So I've been focusing on within the B2B space, vertical SaaS solutions. I think there is a deep need for additional solutions on specific industries. And so, we've all seen these horizontal plays out, and I think horizontal works well, but when you start getting to specific industries, For example, I made an investment in a company called Blue Shift, focused on omni-channel experiences, being a customer data platform purely for businesses that have an online presence, right? And so, online presence and have video. So the Discovery is one of their major clients as well. So you watch items online, they do recommendations and whatnot. That type of solution, I'm very, very excited about because it's verticalized to one sector. And the reason I like it is your technology teams are able to spend the time and get deep into a sector and really meet the needs of the customer. And so vertical SaaS solutions are really exciting to me. So e-commerce and omni-channel experience is one I'm very, very interested. I think that's a bit saturated with the number of players now. But I think industrial area is the next forte, where I'm seeing a lot of innovations, companies like Sight Machines out there that are building manufacturing optimization platform for the manufacturing industry, industrials for the metals and mining. And so I think there's real opportunity for winners to be kind of born in some of these industrial and manufacturing spaces from a vertical SaaS solution. And that doesn't mean just building optimization platforms. It can be ERPs. It can be supply chain oriented services or technologies. One company I'll highlight, that's done extremely well in the public markets that just has proven this strategy is a company called Viva Systems. Now they developed a verticalized pharmaceuticals focused CRM or a sales optimization platform built on top of Salesforce, by the way, utilizing the Force technology or platform. And that company obviously went public and has done extremely well. So I can see this, and many people have tried already as well to replicate it in other areas, but that's where I think most of the money needs to go is optimizing some of these legacy industries like industrial and manufacturing from a vertical SaaS solution.
Got it. And similarly for B2C side?
On the B2C side, lately we as a firm have seen a lot of last mile delivery companies pop up. And so what is really big in the United States is, dark stores and 15-minute delivery. That's something I think a market that's super saturated. We ended up making an investment in one of these companies. However, I've been seeing a lot of pitches focused on that, and I'm not as excited. On the B2C side, I am, again, more excited about a company like Picasso that's on the real estate tech side, who's doing fractional ownership in homes. That is providing opportunity to consumers, to access something that they previously could not access. And so what Picasso is doing, for example, is if you want to get a vacation home, it costs hundreds of thousands of dollars, and you only may use it for 30 days, 30 days a year. Well, Picasso says you're going to use it 30 days a year. Why don't you just buy 1/8 of it? And so you have the right to use it for those 30 days, but the cash outlay is lower. And so that is just, again, expanding markets, expanding the size of people who can have vacation homes, and then also decreasing the need of supply in the market. So we don't have to have millions and millions of vacations home and more people are able to access it. So those types of companies that are expanding TAM, companies that are making lives, again, very easy for consumers and bringing value is super exciting on the consumer side. So I'm looking at real estate tech companies in that area. I'm looking at, some D2C companies and from a brand perspective. But I do think some of those plays are played out.
You just mentioned expanding TAM, and I know for certainty that's your specialization. So folks, anybody who really want to understand how to expand TAM, he's the guy for you.
Thank you. That's one of my passions. I think, when you're a seed investor, you'll often get, the big question I'll try to probe in on is TAM, SAM, right? And I think at that stage, it's the right question because what they're trying to do is trying to get you see where you're focused. And focus is extremely important at the seed stage. Once you get to my stage, when we're at Series B and C, TAM becomes something we throw out the window. But what we want to talk about is expanding TAM. And what expanding TAM is building upon your what you're offering today and how we can expand that either through launch of new products, expansion or decrease in pricing, or your product just becoming more viral with another subset of folks. So we really focus on expanding TAM strategies, because I think that's where we're seeing large returns in some of our portfolios.
Got it. Got it. I have a very curious question, and this is, I've been an investor for early stage investor for quite a while, and I sometimes am hard to get, but as you go up the ladder, it's even harder to get. Why is it so difficult to get an investor?
It's really interesting question, because younger in my career, felt the same way, that it's just so hard, that it's a hill I cannot, climb. I can't get access to these folks. And I think you just have to speak their language, because I think sometimes founders do not speak the language of investors. And it's not that we're all looking for dollar signs. We're looking for some intangibles within a founder. And some of these intangibles include passion and desire and excitement for what you're doing. And I'll tell you, one of the things that is most infectious in a pitch meeting, and this is often said once the founder leaves the room, that founder was really, really passionate about what he's doing. He was really, really excited. And that's something we cannot teach, or we cannot coach him on or her on. And so I would say always be very passionate and excited about what you're doing. Number two, always lead with facts. Anyone who has data, numbers, or support will always impress an investor. And so lean in with what I call, the saying was said to me, be fact rich and emotion poor. And when you're doing your pitches, and that will really come across. And what will happen in these meetings when you are fact rich and emotion poor is the investor will want to double click on that number, or want to double click on that information. And what is that? That's engaging us, and that's speaking our language. And that's what I think is super, super important. And I think what often founders do is they come in with the lead, I'm raising $10 million. This is going to be a huge business. You better get on this train or you're going to lose, versus getting into the nitty gritty of what we really want to hear, which is about the TAM, about the business model, about the tech. What expertise do you have? What's your passion? And so on and so forth.
Got it. Got it. So what kind of rookie mistakes have you seen entrepreneurs make while approaching you?
I think being too aggressive is the first and foremost turnoff for me. And what I mean by that is when even if I ask a stupid question, because often stupid questions are asked to gather more information that you may not be providing as a founder, or may have just gone too fast, and being too aggressive and saying, oh, you don't get it, or you might not be the right investor, or I just said it a few minutes ago. That aggressive nature doesn't help your case. It doesn't make you come off as any smarter. And I think one of the other rookie mistakes is in your pitches, just telling a story on, talking too much about the technology and not having substance. I see so many decks that just have 5 pages of market information, where I have to continually fight for finding out what is your business model, or how are you thinking about going to market. So, that's really, really a turnoff, where I'm not getting the information I need on the front, because I may not make it to slide 5 or 6 if I don't have that information. And I think the last thing I will say is, founders who say there's no competition and this is a whole new market.
Really?
Yeah.
You still have people saying that?
People do say, I'm a trailblazer in this new area. There's really no competition. And when
they don't know how to use Google then.
They don't know how to use Google, right? And so when I bring up a competition, they go, a competitor, they go, well, no, they're different in this way. No, they're playing in the same segment of the industry.
I mean, segment is one thing. They still could be differentiated with, but I'm yet to find a company which has no competition. That's surprising. I mean, I thought there's so much of no body of knowledge out there which tells you that there's hardly any industry where there's no competition.
Right.
Oh,
Right.
ouch, ouch. That hurts. That hurts me. I mean, it would be excruciating for you.
Yeah, it does. It is.
Yeah, and of course, no questions are really stupid questions, I think. And coming from an investor, that could be, I mean, they're not specialists in the industry where you might be operating. So I think that's a bad attitude problem, I would say.
Great.
So what would be then, if we were to try to kind of summarize all that we've discussed, because I would want to get to audience questions, because audience here, I can see on the chat window, audience here is absolutely loading us with the questions, and I would rather give more time to that. But what would be that number one thing in the startup that you would be looking for? I mean, you answered it.
So I'll give you, since I invest in, well, broadly, our fund invests in all asset classes, right? So if I'm a seed investor where I'm really, and you'll see the progression of how I'm building on the number one or the two things that I'm looking for. So if you're a seed, if I'm looking at you from a seed stage, I am very excited about team and TAM. Those are the two things I'm really focusing on. And there's some notion of I want to figure out technology and business models. So there's some extra stuff there. Series A, I'm really looking for all three things in addition to do you have early product market fit and people are paying you? Are you going to get to that elusive 1 million in revenue if you're a B2B startup? Or are you going to have X number of engagements or X number of conversions? That key metric. This is when Series A investors is when they start looking and focusing on the metrics, and revenue is one, conversion is another one, or number of eyeballs or number of community members. So metrics really becomes important at Series A. Series B, if you're coming to me, I want to see, are you at what I call an inflection point? If I give you some, say $1, can you turn it into 2.5 or 3? And so we're looking for companies where we can invest in. We see true inflection point on the go-to-market side or on the virality side, where every dollar we put in, it turns into maybe 2.5, 3. If you come to me at C, now it's about, can you take your business from 10 to 30, right? And again, it's about, can we optimize each dollar that we're putting in? Maybe we're going to spend more money on technology and expanding the TAM a bit more. Once you get to the D, it's, you probably have raised $75 to $100 million. And now it's about, how do we get you to 100 million in revenue? And the fastest and greatest way to do it. And usually it is injecting more capital because the sales and marketing engine is really, really good. So that's kind of this life cycle of how we're looking at things. From B to kind of D plus, it's really how do we juice up the financials from a sales and marketing perspective. And then I would say A and before is really focusing on team, market size, business model, and getting that early metric.
It's very interesting that you talk about it. Our DoDash investability platform, which is 2 weeks to launch or private beta launch, is actually assessing you in 5 T dimensions, as we call them. Team, traction, timing, technology / product, and TAM. So we are continuously assessing the companies based on the data which the founders are giving us on these 5 dimensions simultaneously. So yeah, so it's interesting. I mean, these components are so important to you as an investor. Why should founders care about the VC brand, if I may ask?
Yeah.
Money is money, right?
Money is money. So this is my advice. If you're an early stage company like Seed and Series A, brand of a VC, in my opinion, is very important. It does 2 or 3 things for you. One, it's a signal to the market that your idea is validated by a very well-known VC who has a fabulous track record. And so that's extremely important. The second thing is you want to focus on a brand VC versus focusing on a brand VC, focus on a brand partner, VC partner, who has that domain expertise or who has that industry expertise. If you look at partners within top firms who focus on seed and Series A, you will often find former operators or former folks who have been executives who have had exits, who can actually be your board member and a real board member, not just show up to meetings to do voting on governance and key items, to actually be in the trenches with you and work through problems. And so some of these top firms at the seed and Series A stage have some fabulous partners who can really help you scale. And so I think brand is really important at the seed and Series A. Once you get to the B and C, money is money, value is value, governance is governance. And so some of the things that I offer versus what NEA or others offer are very, very similar in my opinion. So brand becomes less important once you get past, I'd say, the Series A stage.
Got it. Got it. I think this is very important for the founders out there. It's not just about raising capital. Before I move on to the audience question, I have just one last question, which I thought I'll hit you up on. What's your regret capital, personal regret capital?
There's so many. There's so many. So we were looking at Plaid early on. This was when it was a $1 billion valuation. I was on a walk with my senior partners and I said, I think I can get into Plaid. It's a $1 billion valuation. I think this is a 10 plus X opportunity, even from that valuation, because I had been following Plaid early on when I was a part of a fintech startup. I was like, this company is just amazing. It's just revolutionizing the fintech space. My partnership said 1 billion is too expensive for TAN. It's no way going to be worth, that. And I was like, these guys just don't get it. They don't get it. I'm really passionate. I wish I was able to do it. Regardless of the acquisition from Visa and falling out, and now they've been valued even to be far greater than that. That's one of the ones, even at a $1 billion entry point in terms of valuation, this company is going to be, I think, one of the fintech companies of our time, of the 2000s, not only because it's enabling so many different businesses, but it is just changed the world of fintech and actually brought it to light. So that's one I will tell you. And there's a handful of others. There's one that recently, I won't tell the valuation, but we had an opportunity to invest at a couple $100 million. It was in the database space, and it was recently valued at $1 billion. And so we were just 6 months away from almost a 3 or 4x markup. And signs are pointing to this being a multi-billion dollar, exit. So, we kick ourselves, but I'll tell you one thing that's funny about us venture capitalists. We miss out more than we win, but we'll never say it out loud. And if you go on, like, say, Bessemer's website, they'll tell you all the companies they missed out on. And Bessemer Venture Partners, they'll list that all. And they're the most greatest companies in the world. And so, the ones we do get right, it's exciting, but we do miss out on a lot.
Yeah, I mean, it would be great if VC firms started publishing their entire portfolio. It'll be amazing.
Yeah. Well, just know this: for every one firm that ends up becoming, or two firms that end up becoming these unicorns out here, just know they probably went to all the venture firms, and a lot of them said no, because everyone makes the rounds here. And that one firm said yes, and it was hapstance or whatnot. But they're going to get the glory.
Absolutely. I always say you don't need 100 believers, you just need 5 in the end.
Exactly.
Awesome. So I think, Ratan, this has been great. Audience, please feel free to hit up Ratan with any questions. I already have a few, so I'm going to start taking the questions. Are you ready, Ratan?
Yeah.
Awesome. So there's this question which is coming from LinkedIn. He says, how can we connect with investor? My company is dealing with climate smart adaptive solutions and working with poor landless communities for producing safe pesticides free food for millions of consumers both at home and abroad.
Mm-hmm. So I would say one of the advice I always tell early founders is don't just talk to an investor because he's an investor. Go to a very focused investor. So that type of opportunity wouldn't be attractive to me. There's a couple buzzwords that you said that said, I know nothing about this sector or this segment. And so I would be a quick no to this investor, but there are specialized folks who are focused specifically in this area. So my advice is use those keywords around climate or ESG or poor landlocked and try to find investors who are passionate passionate about that space, and there'll be more of an open ear in terms of discussion. I focus in a generalist area, but everything is technology oriented, and it's either focused on traditional kind of B2B or traditional B2B2C. And some of these early ideas around kind of maybe climate are just not going to peak on my fund.
Thank you for this. There's this question from a gentleman called Muthu Raju from India. He says that he operated as a merchant exporter of home textiles from India. Now he's looking to set up a brand new startup company in India with a goal of creating next Alibaba. Mm-hmm. Would you be interested in investing in this B2B domain for merchant exports from India to the globe? I thought it's already happening, isn't it?
It's already happening. It's not, again, I think India is not a major focus of ours in the seed stage fund, at least. But that idea, I would say, is going to require someone to bootstrap it for a bit because there's so many Me Too's out there. And so you would have to bootstrap that company, show some early results to say you're the great founder or the person who can do this well, and then take follow-on capital who follows. But if there's already too many Me Too's in this space, I think it'll be tough to get funding early on because the investor will say, hey, there's 5 other people doing this. What makes you special? Well, why don't you go figure it out and then come back?
Absolutely. I completely agree with you. I think, I mean, this is not the way to realistically raise capital. You need to be more, I mean, you're so data deficient at this moment. You want to do something. Okay, when you've done something, come back to me. Alternatively, bootstrap, build it with the eye on the investor. Yeah. Eventually, but then you got to prepare how to let your data tell the story.
One of the things I'll say for the people listening who are thinking about talking to investors, venture capital venture capital money or capital infusion seems very exciting for your company. However, you have to know that at this stage, without capital, you are a founder and you can do as you please and grow your business how you want to grow it. With an investor, you have now set yourself up for a number of expectations and a number of maybe additional challenges that may come having an investor if you are not the type of company that is growing or not. And so it's best to come to an investor, in my opinion, when you have your business more fleshed out and figured out, versus just saying, I'm looking for capital. Because if you're just looking for capital, oftentimes it's going to be a challenging road even after you get that capital.
Absolutely. There's one question from Vinay Yadav. I think he's also from India. He says, are there any opportunities for drone-based companies in Agritech which are in initial stage, has pre-orders of huge numbers and need seed funds to manufacture MVP and further for mass production? That's cryptic, actually.
Yeah, we've looked at a few drone. The problem for me is that I continually look at this area as kind of early chasm, and there's not a lot of revenue, or there's not a business model defined yet, or an adoption or timing around this. And so, again, I'm the type of investor who wants to see 2-3 years down the line and saying, even if it's at seed stage, that, man, this can be a really, really large business, and still drones so early chasm for me, in addition to some other sectors like VR, AR to me, so early chasm. I can't get it behind some of these types of technologies just yet.
But I think this brings to a very interesting question. You know, I mean, this is a hardware business, which this gentleman is talking about. How does he manufacture his product without external help? What would be a suggestion? I mean, even if he has to bootstrap to prove an MVP, how should he go about it? Because, I mean, this is something very valuable. If he says he has pre-orders, now I don't know what that means, but how would he go about even building out those products, you know?
That's a challenge in today's market. I will say venture capitalists usually don't like to fund hardware, kind of the manufacturing component of it. And so maybe there's access to the debt he can get, or, there's these great companies in the US. I don't know how they are performing elsewhere, but there's companies like Pipe and a few others that you can sell your forward revenue for debt. And so there may be opportunities like that out there. That is revolutionizing a funding space. I think those could be avenues. Taking pre-orders is something that's been happening a lot, where you take these dollars and then you use these dollars to make these units. But usually as a traditional venture fund, you're trying to invest in companies to buy equity, not to use to make technology versus to manufacture. And so venture capital may not be the right source. In terms of prototyping and developing ideas, yes, you've got to find, again, an investor who's interested in this space and is willing to take that risk. And you may want to raise an angel round or a small amount of capital to build this prototype, and then go for more, a larger capital from venture capitalists or other investors.
Absolutely. Vinay, for you need to probably dig into your own pockets, family, and of course, some angels who could potentially support you with building it up to a point where you can actually see those fulfillment of pre-orders that you already have, or maybe ask your customers who are willing to back you. That could be a possibility. I think at this stage, without a proven product, it's going to be difficult for VCs to play ball. There's this gentleman called Lex Huntsman. He says HMI platforms are due for disruption.
What is HMI?
I don't know. I mean, these 3-letter acronyms are killing sometimes.
Yeah. Google HMI.
Yeah. I think while Lex still clarifies what HMI is, I'll take the next question from Kishore.
It's human-machine interface, Nikhil.
Okay. Human-machine interface. Thanks, Tim. Thanks. Thank you, Tim. All right. There you go, Ratan.
Okay. It's not an area I know well, so I won't speak to it. I don't want to try to make up something on the fly here. So maybe we take the next question.
All right. Tim, I'm gonna bring you in to answer that question, because this is we're gonna really reveal who you are. But
no, it is the revelation.
Okay, later. There's this question from Kishore Ratan. How do you view research, design, and development of probable IP products, early stage startup, for example, cost-heavy prototypes like in renewable space or micro factories, trying to innovate in EV battery tech, B2B, B2G, or even B2C?
Yeah.
Would you invest in such teams, and what would make you invest in such teams? I think that's a pretty good question.
It is a good question. We have looked at this space. We've decided not to focus on it, and there's 2 reasons why. One is we don't have the proper expertise to assess these technologies outside of hiring consultants on every deal. And so we're not able to assess some of the technology or science behind it. And so we have not focused on it. However, there are a number of funds that focus primarily on this and are able to assess the technology. Now, what would I look for in it? And I know some of these funds, what they look for. Again, this comes back to having expertise in the area. So you were at XYZ company in this space and you have the knowledge and you performed extremely well there, and they can do reference checks on your abilities and your background is going to be really, really key for those investors. Two, the core technology you have, you find an investment partner who actually has experience in this space as well. And so assessing expertise is going to be the biggest thing here, even if there's hard R&D here. Most investors will give you milestone-based capital, meaning they'll let you run to a certain point and then they'll take more, give you more capital versus giving you all the capital at once to develop this from end to scratch. Unless you're an amazing personality or have this fabulous expertise that they can assess and say, hey, I want to bet on this person and I'm ready to do it, which is few and rare unless you get, you know, capital or access to very large funds like SoftBank or General Atlantic or a few others.
Got it. So there's this question from Dr. Shiva. What are the chances there to get investment in biotech startup like Arivia Tech? We are really looking for funding, seed money, Series A. We have prototype product for animal healthcare. Thanks.
Yeah. So again, I mean, we're all tackling issues. I'm not tackling sectors. I'm not an expert or interested in from an investment perspective. Biotech is so hard. It's one area, again, there's a tremendous amount of science. And so there's not a ton to assess. For us, we focus on SaaS, fintech, marketplaces, and broadly digital health. And so those are the types of opportunities I think I could add value from an inside perspective. Biotech, again, there's a lot of binary outcomes in these markets. And sometimes you're not able, even if it's a fabulous idea, you're not able to find product market fit. And so, you know, it's so hard for us investors who are numbers focused to focus on these areas.
Got it. I think, you know, you got to narrow down your search, look at the thesis, investor thesis carefully, Dr. Shiva, and then, you know, have a very targeted, compelling approach strategy to them. That would be my suggestion to you. There's this question from somebody or a gentleman called Idris, who is ready to launch a cashback app in London. They're looking for investors who can look at us and our product.
I mean, my big question back to this investor would be, what makes you different from the other 15 apps that are in this space? Or, you know, why you? And then the second question is this actually kind of a product or a feature? Because if I look at a lot of other fintechs, they see this as a feature component. And so you really don't have, I consider what they call a moat or a defensibility in the space. And so you really have to be different, and you're going to have to be very brand oriented, and you're going to have to spend a lot of money to acquire users and keep them on board. And so this kind of becomes a really tough business to invest in without having additional kind of particulars.
Got it. So there's this, I mean, I think there's one question which circles back to our earlier conversation regarding passion. And there's this question from Kishore who says, how do you measure passion? I mean, it's not relevant to the business opportunities we're talking about here, but
yeah. So by definition, passion is something you're extremely interested in and you can show enthusiasm about. And so I'll give you an example. So you are you've been working in the infrastructure space for the last 5 years, and you worked for 5 different companies. And passion is measured by so you start a company in the infrastructure space now. And that really shows me, one, that you have a deep understanding and you're excited about the industry that you've had expertise in and that you're going to continue to work in. And so one way is actually following something that you have done for a very long time that you continually want to do. That's one thing that I look for. 2, when we ask you questions or when we probe you on scenarios, you really have an excitement and desire and understanding, and you do it with enthusiasm. in saying that, no, we thought about this as well, and this is why we're doing this. Or, we are going in this way because this competitor is doing it wrong, right? And so that really shows us that, hey, when you've really thought about this, and versus us giving you homework to go think about it, you're actually doing it in your free time, and you're excited about it, or you've written a paper about it that you want to share with us, or you've done, you spoke at a conference about it. And so you're actually doing this in your free time, and you're doing it for free. Is a sign that, hey, you're going to do this even we give you money or not. And that passion just bleeds and exudes through your body language, through your discussion, through your work, and so on and so forth.
It actually, this question about this thing about passion has kicked up a storm on the chat. I can see there's also some rhetorics out there and some cynical responses. It says, is it all about storytelling, suiting as per the investor?
There's a natural way of doing it, and then there is a fake way of doing it, right? And we can and don't get me wrong, like I can't read the fake sometimes from the real, but how we investors counter that is just we don't have one meeting with you and invest. In most cases, when you are talking to an investor, regardless of the stage, you have a handful of meetings, and some will be formal and some will be informal. And that's how we gauge passion sometimes. In the first meeting, you may be able to fake it. Second meeting, you may be able to fake it and do the storytelling. By the third and fourth meeting, by we go to lunch, or if we meet or we do another Zoom call, at some point, we're going to see, oh, this person really doesn't have a passion, or really was just faking it in the beginning, or had choreographed this 1,000 times, and so on and so forth.
Yeah, you have your own ways to uncover those things, right?
Yeah.
And often enough, you're not able to.
Often you're not, yeah. And that's okay, because there's always deals in the portfolio that you thought they were one thing, then they ended up being something. And that's for every venture capital.
Yeah. I mean, I think there's this further conversation which is going on around it. Is like, again, as I said, it's more like a rhetoric. Extremely passionate scientists also have near indifference about their field, but they're extremely passionate. That's the message. Not everyone is Neil deGrasse Tyson.
Yeah.
Of course, being a CEO is about good communicator. Poor communicators have hard time selling. I mean, that's given. That's,
yeah.
You can't tell your story and you cannot talk about your product or your company in properly. Then obviously it's not going to help.
That's right. But in that case, if you have data or numbers to support it, that may speak more about greater.
Absolutely,
right?
Absolutely. So let the data do the storytelling, and I think that's the highlight of it. That's the value of again. I mean, that was the whole purpose, our defining purpose for helping underserved, underrepresented founders to be able to access capital by letting the data tell the story. And that was the motivation, that was the intrinsic motivation behind DoDash. Again, another question. There's this question again from Kishore. He says, how does competitions in investor portfolio be viewed?
How does competition in an investor portfolio? Okay, so if there's a similar company within, yeah. So, as a fund of our size, we try not to have competition within the portfolio because it creates conflict. However, in larger funds, I have heard when, like some of these very, very large multi-billion-dollar funds, they create a bit of a wall between the two companies, and they're managed by different partners, and so information sharing is not happening. But for us, we try to invest in the top 5, top 6 players, particularly, again, I'm talking about the mid stage. And so we want to make one bet. And so we don't try to make multiple bets in the same sector.
Got it. Then one question which is coming from Lex. I just have time for probably 3 other questions, max. What kind of a non-SaaS B2B companies are interested in seed VC space?
So non-SaaS, you said?
Yeah, non-SaaS B2B companies which are interesting in seed VC space.
So is he looking for like what's consumer, consumer types of companies? I'm trying to get a sense because non-SaaS can be anything, right?
Absolutely.
Yeah,
Absolutely. A
so
coffee shop can be a non-SaaS.
non-SaaS, right? So right now, on the early side, I'm looking at digital health solutions as a big segment. Now, there's two innovations happening in the United States. There's obviously the doctor's office is now moving to the Zoom. That's one component. And the second is some of the hardware that's in doctor's offices is also moving to a mobile state. So there's a company called Echo that does heart monitoring. There is a company like Lemonade that's doing video conferencing, but also sends you your prescriptions. And so I'm seeing some of these offline solutions moving online that I'm very interested by. And there's two reasons why. The service is a service, but there's so much data that's coming out, and for me to analyze in terms of number of visits and the revenue and the additional services that they end up sending or hardware components. So that's really exciting. I'm focusing a tremendous amount on that space. The second area I'm starting to dive into is candidly crypto. In our first fund, we invested in a company called eToro.
You did?
Yeah, in fund one, we invested in eToro. We were early in the crypto space, and I think we want to make some early bets now going forward as well, because this is going to stick around. And so those are areas that I'm really focused on, finding B2B solutions in the space, in addition to maybe some additional consumer solutions as well as I think the consumer solutions are very saturated. How many eToros can you have? How many Weebles can we have? I think there needs to be additional innovation on the crypto side from a consumer point, but I think there's so much innovation that can happen on the B2B side of the crypto space.
Awesome. There's this question from Michael Haley, and I've seen his startup pretty closely. He says, I'm reading up on fundraising for my B2B solution in the cloud space. I have seen starting seed amounts from 100K to millions. What are typical driving factors for those discrepancies? Does that come down to straightforward to team, TAM, business model, tech?
More than likely, there's usually two components. If you don't have team, you have numbers or fabulous technology. If you don't have fabulous technology and number, then it's team that they're betting on. So it's usually either or. TAM is usually not a reason you're seeing a higher valuation or not. It's traction versus team. And maybe early on, there is some product that they see, but I always ask this question when a company is Series B, when they come from me for Series B capital. So what was your pitch at the seed stage? And 95% of the time, story was different. The technology has been pivoted, augmented, or the market segment has been pivoted. And so one of the things I like to tell people is you don't have to have all the answers at seed in terms of everything defined just yet, because more than likely it's going to change by the time you're a Series A and B, and you should be agile for it. But directly to response to the question, yeah, it's often team versus traction, and that's why you'll see the variabilities in the amounts and the amounts in valuation too.
Got it. So what would determine the valuation in such a case when the market opportunity is massive? When the market opportunity is massive, it also means that there are going to be number of players which would start springing up in that.
Yeah, if you're at the seed stage and you're getting a crazy valuation, it's probably because you had an exit previously that was quite meaningful, and they're willing to pay up because they think you're a fabulous founder and give you that. The other reason is, again, you have numbers that support it and you are able to get a multiple on it. 3, and this is the soft case, no one gives a high valuation purely for TAM. But if it's in combination with deep early traction and great team, TAM can be a multiplier, but you're not going to get one purely for TAM.
Got it. That's all we had time for today. In fact, we are over time, but I want to hear HMI question, and I'm going to dial into Tim to explain a little bit about that. So I'll just quickly introduce Tim here. He is Tim. Why don't you go yourself? You're one of the biggest concern in HMI space now, at least attempting to be in HMI space. So go ahead, talk about it.
Okay, well, thank you first, Ratan. This was really some, I think, very honest and authentic insights into your space. I think this was really helpful, and I'm not just saying it like that.
Thank you.
Yeah, so HMI, I mean, I'm not as much of a guru as Nikhil said. I guess I would just want to address the question correctly. Could you restate it, Nikhil, maybe? Because I
You
just
said that HMIs are due for disruption. I thought HMIs have not even come to fruition yet. Disruption is a bit too further down the line.
Yeah, this is obviously a participant of the future. I would agree with you here. I also think that there's definitely some development in the field. So I see a lot of it in the field of industry and manufacturing. But I'm not going to say it's in an experimental stage, because on a B2B level or on an internal business level, it's definitely being used. But it's not like there's 10,000 of use cases, right? It's very specific. So I work in the automotive space, and there's definitely some places where these technologies find applications and happy users. But these are small R&D, I would say, application cases. And there's definitely a lot of looking into this. But it's not huge yet, I would say. At least not the HMI that we're looking at when we look at, the future and the fancy new things that are about to happen.
Perfect. Good. Thanks for this insight, Tim. And thank you, Ratan, for making time. I know it's early for you, well, not so early in the morning.
Not so early. It's 9 a.m. Yeah, not now 10, but yeah.
And thank you, Tim, and thanks everybody for dialing in, signing in, and really appreciate it. And thank you, Ratan. Thanks once again.
Thanks again, everyone. Have a wonderful evening or night wherever you are. Bye-bye.
Bye.
Bye.